So I have been here a long time, and the great thing about getting older is you actually do develop some experience, and hopefully you learn some things along the way. So I'm hoping to take advantage of that and convey something useful to you. I'm very happy to answer questions. This is called a conversation with the Fed. So I have a PowerPoint, I have a deck, I have lots of information to regale you with. I could even tell some jokes if it came down to that. But I'm happy to let you lead the conversation. As we all say when we get up in front of groups like this does not represent, for the most part, an official Fed position. If I am expressing an official Fed position, I'll tell you, most of what you'll see in my slides are simply facts. And then where you may have questions, as you've already had, I'm happy to voice an opinion, but again, it's my opinion, not necessarily the truth with a big T. All right, so this is what I'm going to cover. I'm going to spend just a few minutes talking about what the payment system is. And then I am going to talk about our role with a little history way back to 1913 and some things that have happened since then that's changed our role. And I will talk a little bit about our current activities in payments, the broader payment landscape that you all interact with. And at the end, a little bit about where we're going, just as the payments world is changing, innovations like PayPal, Bitcoin, et cetera, we need to keep up to date with our activities. So that's what I'm covering. Is there anything really top of mind that you have that you want to make sure I touch on that may not seem covered in this agenda? So the question was to touch on payments fraud, and in particular, perhaps the interaction of things like the internet and the cyber world in which we all live now, and what has that done in terms of payment fraud and security. So remind me, I'll try to make sure I touch on that. All right, so here's the payment system in a nutshell, and what I like to emphasize is when you and I think about payments, certainly before I came to the Fed, I just thought about things like cash and writing a check and, ultimately using a card, that sort of thing. That was a payment. But it really is a system, and it's an infrastructure, and it includes people who use payments like you, electronic networks. It has a whole set of laws and regulations. Obviously, financial institutions are involved, service providers. To me, it's sort of like a highway system. But it's a system that allows you, businesses, and others to buy and sell things, to give, birthday gifts to beloved ones in our lives, and all sorts of things. If we didn't have this system, it would be much harder to transact business, right? We'd have to go back to something like a barter approach. You can do that on Craigslist even today. But it's way more efficient to have a system like this that allows us a certain amount of certainty, reliability, comfort that we can transact business as individuals and as companies. The other thing that I like to point out about the payment system before I get into what we do here at the Fed is, again, it's not just about the transaction. Here's a check that's being cleared between two financial institutions. That tends to be where organizations like the Fed and financial institutions focus. But for most users of payments, you also care a lot about how you originate. So for example, right now, more and more people are using smartphones, and there are applications you can use now that relate in some sense to payment activities. All right, so that's a really interesting change on the front end. On the back end, especially for businesses, it's really important that it's easy to get a payment to pay for a bill and know what account to associate with. And while I'm not going to get into those details tonight, there are many, many challenges in this broader chain of events than, frankly, there is just between banks. So I point that out because when I think about payments now, I really look at this broader picture. But tonight we'll be touching more on the processing, clearing, and settlement. So this is a long list, but this is, in essence, most of the main payment methods in the United States. With respect to the Fed, we have a role, if you consider both our service activities and our regulatory activities, in all of these payment methods, but we're mainly involved in the ACH, cash, check, and wire transfer. We don't do any clearing and processing as such in the card arena, although we now have some regulatory role there. All right, so I'm going to start with the past. And this may not be something that all of you know, which is when the Federal Reserve Act was passed, in the act itself, Congress told the Fed to get involved in payments. So tell me if that's new for some of you. Is that new information for those of you who are students of the Fed? Yeah. So here's what was going on. Today, when we think about the check, it's something that, probably some of you still write checks. And it's something that consumers use as a means of exchange. We refer to it as a retail payment method. In 1913, it was mainly a wholesale payment method. It was mainly a method of exchange either between companies or between banks. So think about the check in 1913 as a wire transfer today, where, if you sell your house, you might have to complete the transaction with what's called a wire transfer. Tends to be large dollars, tends mainly to be used between large companies and banks. That's how the check functioned in 1913. And in the financial crisis in the early 1900s, what was happening, because we didn't have a nationwide check system at that time, banks could choose whether or not to clear and settle a check that was drawn on them. And because of the financial crisis, a lot of banks were saying, I'm not going to honor your check. I'm not going to clear that because I'm not sure I trust you for the funds, right? I'm not going to give money to company A and then expect that I'm going to be able to get that from you, the bank that is depositing this check for clearing. So that actually led to some banks going bankrupt. And it added to the financial crisis, not unlike all the counterparty risk that was a big problem in 2007, 2008, et cetera. Just a different form, right? The check. So Congress said, Fed, we want you to do a couple things. We want you to establish a nationwide clearing system. We also want you to establish a par system, meaning that if Bank A honors a check deposited by Bank B, they can't take a haircut as a fee. So today, we all enjoy, basically as consumers, par checking. That's not true for every payment system, but it is for checks. And that was part of what Congress told us we needed to do. So over many years, it took a long time, we finally established a nationwide check clearing system. So you could count on being able to write a check and essentially any bank would honor that as part of this nationwide clearing system. We also were told that we should issue a uniform currency, right? So we all kind of think of ones and fives and tens and hundreds, and they all look the same and they all feel the same. Well, I suppose it depends on how much they've been used. They may not all look and feel the same, but you know what I mean. Earlier, before we were told to issue a uniform currency, banks would often issue their own currency. You probably recall all of the discussions going back to Andrew Jackson and others who were really hostile to a central bank. And there are all sorts of problems associated with different banks, different states, different agencies issuing their own currency. What does that look like? It kind of gets to the point about Bitcoin. What happens when some entity, without any final funds, secure funds undergirding that currency, what does that mean? How can you trust that it's reliable? And in fact, you can't. It ends up floating depending on the transaction and the counterparties and the value they assign to it. So this is what we were asked to do. And the other thing that the Act set out for us in the payment space is it said that the Treasury could designate the Federal Reserve banks as fiscal agents, which essentially meant the Treasury could use us as a form of a government bank. And indeed, the Treasury has been doing that in different ways, and I'll talk a little bit more about this since 1914. We here in this bank, for example, do all of the savings bonds processing for the Treasury as an example of a fiscal agent activity. So I'm going to also point out a couple of things about our role and how it's changed, probably mainly to make the point that we are a creature of Congress. Hey, And we are a public organization, a public institution, and so if Congress wants to change our role, whether it's in monetary policy or payments, they certainly have the authority to do that. And they have done that in payments. So let me give you a couple of examples. Prior to 1980, the only financial institutions that could use our clearing services for check mainly and wire transfer, and in 1970s we started into the ACH arena, were member banks. And keep in mind that in this district there are only about 120 member banks. So that's a far fewer number than all of the financial institutions in this district. So they were the only ones who could use our services, and we gave them away for no fee. It was just part of the deal. So Congress said, well, we don't really like the fact that you're giving this stuff away for free, because that's not the best use maybe of taxpayer money, and I would agree with that. And so they said, we're going to require you, Fed, to recover all of your costs for providing those services, just like a competitive firm like Wells Fargo, US Bank, whomever. And you're going to have imputed taxes and imputed profit, and it's going to be a level playing field. But in return for that, and not so much quid pro quo, but because we're doing that, you can open up your services to any depository institution. So now our customer base goes from, a couple thousand member financial institutions or banks across the country to we serve in excess of 15, 16, 17,000 institutions with our ACH services alone today. But they pay us a fee, just like we would be a private sector organization, and we demonstrate over the long run, but usually on an annual basis, that we fully recover all of our costs associated. So there are no taxpayer dollars in this part of our work. Another change that Congress put in place is something called Expedited Funds. So one of the things that you and I probably get annoyed with once in a while is if you go to a financial institution and you cash a check or you deposit a check and they put a hold on it. Yeah, and so you can't get your money for it like days. And you're like, I need my money now. And frankly, this is why some consumers who are especially cash strapped don't use banks, because they need their money right away. I can go to a Walmart and I can see in their check cashing line, people who may work for a contracting organization, may be young, may need that cash right away. And so they may not want to go to a bank where there might, quote, be a hold, especially if they don't have an account. In any case, what this act did was it said to the Fed, we want you to write some rules that put limits around the holds that banks can put on things like a check. And in fact, back then, it depended on whether the check was local or whether it was originated from a different geography. There were different time frames associated, unless there was clear potential evidence of fraud, and then other rules prevailed. But this, again, affected the banks because we had to change all of our check operations, all of our processing activities to conform with this new law. And then last example that I'll give is with Dodd-Frank. So Dodd-Frank, I have not read the whole 2,000x pages. Maybe some of you have, more power to you. Embedded in the Dodd-Frank Act is something that's typically referred to as the Durbin Amendment, because Senator Durbin was the instigator and champion of this part. And basically what this part of Dodd-Frank says is the Board of Governors, again, my colleagues in Washington, need to look at something called an interchange fee associated with your debit cards. So if you go to a store, like a grocery store, and you buy $100 worth of groceries, you don't pay anything to swipe your debit card, right? You get $100 worth of groceries. The grocery store pays the issuing bank, the bank that gave you the card, a flat fee. Before this, it was about 45 cents on average, plus a percentage of the $100, so maybe 2% of 100. So they don't get $100 back from you, but they have to build that into their cost of business, et cetera. So There was a view in Congress that those fees were too high and that there wasn't sufficient oversight because there aren't that many organizations in this area. And so they said to the Fed, we want you to set those fees for debit cards only, not credit, and not prepaid at this point, but debit only, and only for large financial institutions, basically financial institutions with 10 billion or more in assets. And we also want you to do some things like improve network choice for merchants. So as a result of that, we came out with a rule, meaning my colleagues in Washington, that said that you can charge a flat fee of 21 cents plus a percentage of the tender and a penny for fraud protection. So it basically cut the prevailing rates of debit fees in half. So again, another example of how Congress really affects what we do in the payments arena. Any questions about that before I talk a little bit more about our services? Yes, sir.
Just going back to the holdings on checks. I mean,
Yes.
those rules were set back when data didn't flow as well, I guess.
Yes.
Have those rules been updated since then? I don't.
Yes. Excellent question. So I'll talk about this in a little bit, but now, as you know, checks are cleared as digital images, right? So there's no longer these distinctions. We used to have three types of checks: local checks, what were called RCPC checks, and you don't need to know about that, but that was maybe a check that was from North Dakota. And then there were faraway checks, like from California. And because they were paper, it actually took time to move them in airplanes and all that sort of thing. Now that's all gone away. So it used to be that a check from far away, a bank could put a 5-day hold on it. Now everything's next day, 2-day, basically 2-day. So they have been updated, and I wouldn't be surprised if they are further updated as we wash all of the paper out on the check side. In payments, we have a mission that's a little bit different than you might think of when you think of our work in monetary policy, although it all ties back to our interest in ensuring a very vital economy. So in payments, unlike, say, a commercial bank where their mission might say something like, we want to provide great customer service, we want to deliver value to shareholders, et cetera, ours is integrity, efficiency, and accessibility. So what does this mean? Integrity means we want to do what we can to make sure that the payments you use are reliable, we can't eliminate all fraud, but we can reduce the risk of fraud, that, again, our systems are up and running 100% of the time, we're very close to that, et cetera. Efficiency means we want to push the cost down as far as possible so that we use the fewest possible resources in our production of our payment services. And that means as consumers, as companies, as banks, they all benefit from our efficiency. And so that's what efficiency means. And accessibility means we want a payment system where more or less anybody has pretty reasonable access to it. I mean, it doesn't mean that, again, I'm virtually from North Dakota, so I can make jokes about North Dakota, right? So there are parts of this country that are still really rural. So accessibility doesn't mean there's going to be a financial institution on every corner. But nonetheless, there should be ways for all financial institutions and all end users to get access to the payment system. Now within that, and I've already touched on the first two, we provide services. I'll talk about this a bit more. We serve as fiscal agent. And we also have this third role, which we call leader catalyst. So there may be instances, and there are not lots of these, and we try to do this very judiciously, but there may be instances where the market on its own, the industry on its own, is maybe not pushing an innovation that we need in payments or using technology as fully as possible, and where we might be able to kind of nudge things along in a way that's beneficial for society. But we're really cautious about this because, to the point that this gentleman made, sometimes you can think, oh, if I have a dollar coin instead of a bill, Treasury saves all this money. But have you really considered all of the impacts of a change like that? So we do this very judiciously, but I'll give you an example in a minute. So services that we provide: we collect checks, We transfer funds electronically, wires and ACH, and we distribute currency and coin. And then I already talked about the wide variety of services that we provide to the Treasury, mainly related, again, to the debt that they collect, Treasury bills, savings bonds, many of those kinds of activities. We provide transaction services for them. And again, what we do in terms of the services we provide is what we call interbank clearing. And the payment system is more than interbank clearing. In fact, there are a lot of payments that don't clear between banks. A very large bank, for example, like Wells Fargo, many of the transactions, the payment transactions that they process are what are called on-us transactions, because both you and maybe the grocery store you bought something from both hold accounts with Wells Fargo. So they don't have to go through an intermediary. They can clear on the books of that bank. But this is the market that we serve, clearing payments between financial institutions. Now, here's an example of the Federal Reserve serving as a catalyst, and it gets back to the question that the gentleman asked about availability. So it wasn't the lack of technology that prevented the current digital clearing of checks that we do today. The technology was available back in 2003, 2004 when this all got started. The barrier was the lack of, say, will, motivation, whatever, frankly, on the part of the industry, because there still was a fair amount of money that could be made on float, especially if you're dealing with lots and lots of checks and somewhat higher interest rates than are prevailing today. And so there wasn't necessarily a lot of interest, because if I am the bank that is being collected from, I might want to hold on to that money a little bit longer. And if the bank that's trying to collect those checks, the value of those checks from me, they have an incentive in getting it as fast as possible. So two sides of the equation, one may not want to give up the money quite so quickly, the other one wants to get it quickly. If you're a bank in California and you're trying to collect from a bank in New York, you have to fly that paper check across the country because the rules said you had to present the paper physically. That was the system that we had up until 9/11. So what happened in 9/11? Why would that change anything? Well, what happened was you couldn't fly any airplanes, remember? Basically, air traffic control said no airplanes can fly, and that was in place for a few days. And that meant there were a whole bunch of airplanes around this country loaded with checks that could not be cleared. And the Fed stepped in, and the Fed said, you know what? This isn't good. We don't want to create liquidity problems because of this situation. So we are going to give credit to the collecting bank, even though they haven't actually under the law presented these checks in these extreme circumstances, in order to ensure the right kind of liquidity, and then we'll eat the float on our books. So we did that. But we also then went to Congress and said, enough already. This is a real potential problem. We have technology that allows us to do all of this electronically. We have got to change the rules. The rules we have in place are benefiting a few, but not society as a whole. And so that led to this act being passed, Check 21, and we were at the front of the line in terms of pushing the envelope and moving to an all-image clearing environment that we effectively had today. So that's an example of where we served as a catalyst. And just to give you an idea, we were spending every year about $50 million, just the Fed, on airplane transportation alone to move checks. And all of that is eliminated by virtue of this. So it's been a huge savings for society. So here's another thing. In 2002, we had 45 check processing operations around the country, several thousand employees. Today we have one. In this bank, we had more than 300 employees engaged in processing checks. We received typically 3.5 million paper checks a day, which we cleared overnight and distributed to financial institutions around the district. That's all gone. There's not a single employee in this bank. We don't receive a single paper check. All of that's been taken out. And this is the orange line. So you can see what's happened to paper. Check 21 went into place here. And you can see what's happened to paper check clearing. Now, part of this is due to people writing fewer checks, but believe me, that wouldn't lead to this. It's all because of the image clearing. And then the green line is electronic clearing of checks that has been put in place. So that gives you an idea of the benefits. And again, the benefits include lower cost to society, faster availability of funds for individuals and companies, less fraud. There's almost always less fraud in electronic payments than paper payments for lots of reasons. So this has been a very good thing. Board of Governors, I won't spend much on this, but they do have an important role in terms of certain regulations. Some of the regulations that the board used to oversee have moved to the Consumer Financial Protection Bureau, but they still have a role in payments, Reg CC related to check particularly, Reg J related to collections, Reg II related to debit cards. So again, we have a role in payment regulation, although this isn't really the bread and butter of our regulatory role.
We hear much today about cybersecurity. Have you had any problems, and do you have a system that is foolproof that can't be hacked to keep this moving?
Okay, so there is no such thing as a foolproof system. But what I would say to you about the Federal Reserve, none of our payment services has been compromised, has been hacked, has been violated in any way, shape, or form to date. Okay? That doesn't mean we aren't extremely vigilant. And what I would argue, because I have responsibility at this bank for our IT area, including our information security area, we take this as seriously as any organization in the United States. I mean, the kinds of things that we do is up there with the NSA, Department of Defense, et cetera. We take this very seriously. That, however, doesn't protect you as consumers. That's a different issue. We protect our systems. We provide guidance to banks on the things that they should do to protect all of you. But I'll give you just one small example. Some of you probably do online banking, right? And that's one of the areas that has been problematic because there are lots of people hacking. And especially if you use your computer for, say, surfing the internet, you know, that's not unusual, but you also use it for doing your online banking. It's not inconceivable that you might ingest a virus. You may not know it, and your credentials could be compromised. Now, here's an opinion. I have an entirely separate, dedicated computer. I mean, computers aren't that expensive these days. And all I do on that is my financial stuff. I don't do any internet surfing on it. I mean, again, it's not foolproof because I'm still interacting with my financial institution, but it's like sort of a single channel that I've chosen to kind of lock down. And then I have my other computer where I can, you know, check all the cool things and Facebook and the this and that. And so I'm not as concerned about problems over there because I'm not doing anything that involves my financial business, my social security number, or any of the kinds of things that I want to protect. But that's just what I choose to do. At a minimum, you want to do all the antivirus stuff. You want to follow all your bank's instructions. You want to be checking your account regularly. Fortunately, consumers have a lot of protection. So if something bad does happen to you, you typically, not always, but you typically aren't out a lot of money. But nonetheless, you want to be very vigilant. Lots of things going on in payments. I'm not going to talk about all of these, but technology in particular is a really big deal and has a lot to do with innovation. So does the threat environment. So do laws, rules, regulations. We'll talk about some of this.
When I do my online banking, why is it that my bank actually sends out a paper check to the payee rather than it being strictly electronic?
It often depends on the capabilities of the payee. So, for example, I may use my online banking system, and if the payee is set up to receive ACH, for example, then that's probably how the bank is going to issue the payment. But say you're paying, a smaller or medium-sized business. Unfortunately, a lot of smaller and medium-sized businesses are not able to accept ACH payments. So then what happens is it defaults to a paper check because everybody can accept a paper check. That's the more ubiquitous approach. That's why that happens, usually. So we've talked about this already, at least in terms of checks. A couple things I'll point out. The real big growth area has been debit cards. That's been the fastest area of growth. Prepaid cards are beginning to show up as something of interest. We'll see how that evolves over time. And then you can see again that the yellow line is check. That's the one payment system that has been declining. Now, what's not on this chart is a currency, and actually currency circulation continues to grow modestly year after year, which is what this shows you. So this actually goes from 1990 to 2011. That's notes in circulation. These are U.S. notes in circulation. The different colors show you the denominations, and this shows you the value. One thing I should say, though, is we believe, and it's hard to count because it's hard to count, what people in other countries have stashed under their mattresses, but we believe that a half to two-thirds of all U.S. currency in circulation is outside of the country. And that's because people place great value on the U.S. dollar, and they keep it as just like a savings account. It's something that they know will not lose value. We've never, even when we put out new currency, we haven't devalued or said we wouldn't accept the old. So a lot of what we have out there is in other countries. Talking about checks, what's interesting to me is almost a little over 70% of the checks that we still write in this country are written to businesses and mainly to pay bills, which gets to the point that the gentleman raised in the back about how you can use online banking and thinking you're doing everything electronically. And unless the receiver can receive the payment electronically, that still may be generating checks. A lot of the checks are in the B2B space. That's an area, especially small businesses, that are not yet enfranchised in terms of the electronic movement. And again, I already said that the debit card is, and that's the purple here, has been the big winner over the past several years in terms of areas of growth. And the blue, again, is check. So you can see that. The light blue at the top, the prepaid card.
So what type of regulations are there on the prepaid cards?
So there are a number of regulations surrounding prepaid cards. Essentially, aspects of Reg E in terms of consumer protection apply to prepaid cards. Certainly money laundering regulations apply to prepaid cards. One of the main kind of open issues, arguably, is when the Durbin Amendment went into effect. The issue related to managing the interchange fee or other fees, prepaid cards were set aside. And it was done deliberately because they're still relatively new. And so the view was, let's see what happens. But you may have seen in the press that there's been some interest and some concern among state regulators, New York, for example, looking at the fees associated, especially with payroll cards, because the argument is, hey, if someone's being paid $1,000 for a week's work, they shouldn't be dinged with a lot of fees because they happen to put it on a payroll card. So I think we'll see more regulations. I mean, that's usually what happens. You see product innovation, and then you see regulations follow. Yes, sir.
Yeah, I'm kind of curious about the credit card regulation side of things, credit card and debit card, really. So judging by the graph you just showed there, like 70% of all electronic payments are going to be happening by credit card or debit card.
Pretty much.
If you look at Visa, last quarter, I think they had like $1.1 trillion in payments that went through them. And their net income was like 1.1 billion. That's the same as like a tax essentially on the public when everyone's using that as a default payment. What's the government's stance around regulating that and trying to minimize that cost to the general public?
Well, From the standpoint of, I mean, you raise a really interesting point. There are many regulations that apply to credit and debit cards, mainly around things like notification, protecting your data, things like protection in the sense that if you didn't authorize a payment, you get your money back without a hassle. So there's lots of regulation around these products to protect consumers. Now, I think what you're asking about is the regulation around the cost or the fees. And what we've seen is this one movement in the direction of, frankly, regulating fees through Durbin. That's specific to only to debit cards of large institutions. There has been some talk about doing something like that related to credit cards. Some countries do. The European Union has been talking about just regulating interchange in all of these areas. Part of the trade-off is this. So a consumer really, aside from maybe your annual fee, right, you can shop around, and so you can really minimize your fees associated with the use of these products. You can choose to use a card that doesn't give you very many rewards or maybe 0 rewards, and they don't charge you any annual fees. But maybe you're like me and you want your Delta Sky Miles, and so you get the card where you do pay a fee. So part of, this is my opinion, as long as you as a consumer know that you have choices and you know what the different fee structures are, and you're making a choice, and I'm saying to myself, it's worth it to me to pay X because this is what I get for that, my opinion, that I think is okay. I think the problem is more when you sign up for something, or maybe your employer tells you you have to use a payroll card, and there may be fees associated where you don't feel like you've had really a choice, and yet you're encumbered with that. I think that's where the regulators get a little bit more twitchy. You're right. It's more built into the cost of doing business. So the merchants would say to you, you don't see the interchange. I see it, but I have to build it into the cost of doing business. And that, you're right, that's trickier. But will government do more to regulate that? I don't know. I mean, there's some people who have said, hey, we should have par debit cards. That hasn't taken hold. So, there are pluses and minuses to all of these things. Beyond what Durbin has done, I don't see anything specific on the offing. Doesn't mean it might not happen.
Earlier you spoke about that the fees on, debit cards were brought down by nearly a half
Correct.
as a result of one of
About
these amendments,
45%,
right?
correct.
Okay, my question is, I didn't see prices go down to match that, and I still walk away with my $100 worth of groceries just like I did before that. Who's cashing in on that?
And again, it's a good question, but there's no way I could even give you an answer, because let's say you're Target. You have all these costs of doing business. You have changes in commodity prices. You have different costs associated with tender. It costs them so much to deal with cash, so much to deal with cards, et cetera, et cetera. They offer sales, and so how this factors in as a specific price component in their total cost of doing business that they can then give back to you, I just don't have the data to be able to assess it. Doesn't mean it's not a valid question. And in fact, banks have raised the issue of, well, hey, Congress has done this, but where we see the savings for the consumer? Where do we see this actually going back? And again, there's really no answer to that. And frankly, I don't really know if the merchants themselves would be able to provide that sort of transparency. But it's a good question. Yes.
So I was just wondering, you talked about your charter being to clear the payments and to manage the payments for check and cash and wire transfer and ACH. Has it been considered that you would become a payment provider network competitive to Visa or MasterCard or one of these?
Well, and that's a very good question too. And I would say that it has been considered, but it's really never been seriously considered. I mean, there have been some papers written about it. There have been, different pundits talking about it. Just to give you a little bit of history here, In the case of the ACH, which also got started around 1970, thereabouts, the banking industry actually came to the Fed and said, we want you to operate in this arena. So help us get this up and going. The Treasury was a big proponent, kind of helped develop some critical mass. So there was sort of, we want you involved. It wasn't really Congress as such. There was nothing that said we couldn't do it from Congress, but it was more the industry and others saying, get involved, Treasury, et cetera. In the case of cards, those really started out with kind of the Bank of America credit card, diner entertainment kind of thing. And it was entirely owned until, fairly recently in the history of cards by the banks themselves collectively. There wasn't really an independent Visa, MasterCard, Discover in the sense that they exist today. The banks themselves owned those networks. And then over time, debit cards have a completely different history because those were originally issued only for purposes of ATM transactions, only for that purpose. So they were exclusively and strictly a financial institution medium. And then financial institutions realized, oh, instead of having a one network for each of us, we should band together and develop these large interoperating networks. And then as that started to evolve, they said, hey, we can leverage this infrastructure and push this out and get merchant adoption. And it was really only as that began to take hold that products that Visa and MasterCard had in terms of signature debit began to be useful because they fit more in that point of sale environment. And then over time, for lots of reasons, the financial institutions decided to sell off their collective ownership of these card networks and card products for the main. There are still some independent providers, and creating Visa, MasterCard, et cetera. So this has evolved over a period of time, and we were never, in some sense, asked, and there never seemed to be, as it evolved, a reason why we should be involved. The private sector seemed to be doing a good job. I think now there's been kind of more of a concern for the reasons we've been talking about. But again, it would take an act of Congress for us to have a more direct role. So the question was, are we seeing a different kind of fraud? So checks, in terms of check fraud, the organizations that take the biggest hit actually are businesses. They're the ones who are the kind of perennial victims, if you will, of check fraud. And that doesn't seem to have changed much. There hasn't been like a huge increase or a huge decrease. It is easier to create fraudulent checks, but it has less to do with digital imaging and more to do with things like being able to go to an Office Max and buy ink and paper and printers, whereas in the olden days you had to do your counterfeiting by hand. So it's been more technology along those lines, being able to go on the internet and pull down a company logo, maybe pull down a treasury name, but we haven't necessarily seen a lot of new fraud specifically related to digital checks. Where I think we could see in the future, but we haven't yet, is how many of you have used an app where you take a picture of your check and then you deposit it? That was first rolled out to businesses, and we did look for fraud trends there, and there was virtually no evidence that the rollout of what's called remote deposit capture to businesses led to a lot of new fraud. I think we just don't have the data yet because it's too new with consumers. I think that's a potential risk, and we'll just need to monitor that. When you start pushing it out to lots of different consumers, I think that could be problematic, duplicate depositing of items, that sort of thing. But we just haven't gotten the data for that yet.
I'll
Yes.
preface this by saying I love my rewards points.
There you go.
My question is, when we look at the trend and the growth of non-cash payments, and with the correlated rise in, let's call it the innovative fee regimes that are being offered, is there a point in time when U.S. consumers are simply overbanked, period, with the products that are coming our direction?
Well, again, I think that's a really interesting question. I suppose the way that I might respond to it is it's kind of up to the consumer, right? So we like choice, and we get bombarded with lots of products and services. And financial institutions put a premium on those of you who use 3, 4, 5, 6, 10, 12, and lots of young people, the data seems to suggest that they use a lot of financial services, but they tend to distribute their activity across more providers. So they might use bank for this, but Schwab for this and PayPal for that. So our consumption of financial services doesn't seem to be going down. So I don't know that we're overbanked, but there certainly is a huge array of choices. And I think if anything, I sometimes hear consumers feel confused and uncertain as to, do I need all of this? What should I do? How do I make sense of that? If anything. And then we have 8-9% of households in this country that choose to be unbanked, some because they're very poor, but others because they simply don't want to use traditional financial services. So there's such an array of what we do that I'm not sure I could say we're overbanked, but it does feel like a barrage sometimes. Okay, lots of good questions. Prepaid cards, again, this is a whole different interesting area of innovation. So volume and value is small, but think about like the Walmart money card, for example. Now, this is, Visa does the processing. General Electric, their bank serves as the issuer, but if I use that card and if I'm a consumer and I put my payroll on that card, there's no monthly fee. And if I use it in Walmart, I get, I think, another 2% discount on all of those goods and services. So some of these cards have some really nice features and can be very attractive to some consumers. I don't know if any of you have noticed, have any of you gotten a card with a chip in it, right? So some of you are concerned about fraud. This is intended to reduce one type of fraud: counterfeit fraud at the point of sale, right? So this isn't going to help you if you buy stuff using your card online in terms of fraud. And it's not going to help you if someone steals your card and uses it, or something called friendly fraud. Your kids use your card without asking. That's called friendly fraud. Doesn't that make you feel friendly? Yeah. So this may or may not be coming along. One of the issues here is the cost benefit. So who benefits from less counterfeit fraud? Correct. The issuer, right? Because they're the ones currently on the hook. They're liable for counterfeit fraud. In most circumstances, most merchants, in terms of in-person use, do not bear the liability. The issuer does. And yet the merchant has to update a lot of equipment, right, in order to be able to read a chip card, because rather than swiping, you insert, for example. So again, it's one of those issues where it sounds good, and I think it's probably in general a good thing to do, but the costs and benefits don't always flow exactly to the party receiving the costs and the benefits. So just another example of change. Here's mobile. What I like to say about mobile is, even in the payments arena, it's really not a new payment. It's more a new channel. So most of the, quote, payments that may be originated by a mobile device are being cleared by a card. So there's an underlying, even in the case of, I don't know, do any of you use the mobile Starbucks quote payment, right? So that's sort of like a barcode, it's a QR code. You have to have a reader, so you have to get close so they can read it. It's nice because it gives you lots of information about, how much you still have on your quote account, that sort of thing. But the model is really the same as a prepaid card, and it's usually associated with a card where you set up an account and you fund it. So it's not new in terms of the actual payment. This is Square, right? It's interesting, I think, that Visa has a large equity stake in Square. Isn't that interesting, kind of? Yeah. So anyway, here's Square. But Square is basically like a merchant acquirer. It's really great technology in terms of making it easier for, the merchant at the fair or a person who does haircuts or whatever, to have you pay them by a card, but the actual basic model isn't that different. So lots more to come here. This is data that we, the Fed, put together, as well as Pew Research. So over half of US consumers now use smartphones, and you really need a smartphone to do mobile banking or mobile payments. Of that 56%, in our survey, just shy of 30% said they used it for mobile banking in the past year. Very few consumers are actually using their phones for mobile payments. And the number one use is, I want to see how much money I have, right? Because people don't have check books anymore, so you don't write down what's in your account. So I saw this not so long ago, and I'll tell you because I thought it was kind of cute. I was in a store buying a bottle of wine, and there was a young man in front of me, and he had a case of beer, a 12-pack, and a 6-pack, and I'm thinking, really? You're going to buy, what, 3 versions of and it was the same beer, right? So he says, he turns to me, says, sorry, you know, I have to take some time. He whips out his phone and he looks at it, and then he sighs and he buys a 6-pack. So that's what he was doing. He was checking his account, and then he swipes his debit card, right? So he doesn't do his payment, but he needed to know how much money he had. Okay. So here are the services we provide in payments. You know, I provided you with the daily volume and the daily value. So you can see that in funds, for example, we only process about 520,000 of those puppies a day compared to 48 million ACH items a day. But that's worth 2.4 trillion versus 95 billion. So, you know, there's both value and volume to think about. And of course, we do have a monopoly in cash. There is nobody else who can provide or issue cash on behalf of the US government. So in these other markets, all of these other services above check, all of those are priced. And in those markets, we have about half of the interbank clearing market. One thing that you might find interesting, there is going to be a new $100 note that comes out in October. And this is an area where the US government, working with the Fed, the Secret Service, has really done a great job of continuing to upgrade our currency with new features to make it very hard to counterfeit. So US currency is very clean as counterfeits go, but there is counterfeiting. And here's the problem. Let's say you get a counterfeit bill. Think about this. So you are unaware, you are the unfortunate victim of having a counterfeit bill passed you. It could even come through your bank, and that's possible. And then you go to the gas station and you whip out your $100 bill and you try to pay your $50 in gas, and the checkout person looks at it and says, I think this is a counterfeit. This happened to my husband. You have to wait. I'm calling the police. My husband's an attorney. So now he has to wait for the police, and the police verify it's a counterfeit. And they take it as evidence. So now he's out $100, plus he has to pay $50 for the gas. And he knew where he got the counterfeit, but when he went back to get the issue corrected, they said, too bad, so sad, the Fed gave it to us, which, trust me, we didn't. Some things you may or may not know about, for those of you who may be federal benefit payment recipients, you probably know that as of March 1 of this year, no checks. So I'm sure you're all in the electronic world if you weren't already. And the government is moving to this with Medicare reimbursement. That's all moving to electronic payments will be required as of January 1, 2014 for reimbursements to healthcare providers, right? So not consumers, providers. Yes, sir.
I have a question. You've talked a lot about accelerating the pace at which transactions can take place. I'm curious for your opinion on payment terms where you aren't directly involved in how fast something has to take place, but more it's B2C or B2B, where things are now going to extending as long as 120 days or as short as 10 days. And I'm just curious, who do you see winning that ultimately?
So when you establish terms, the way I think about terms around payments, whether it's on whether I'm collecting the payment, I typically want to collect it as soon as possible. If I'm making the payment, I want to lag it as much as possible, typically. And so terms are really, in my view, just a different way of thinking about price, right? So if I pay you faster, that's why in many B2B environments, if I'm willing to pay you faster, you might be willing to discount your actual product price. So, and even with financial institutions, with businesses, they don't have a law that says you have to provide availability by X. So they negotiate availability for, say, checks that are deposited. And sometimes I'll have a business complain to me about that, and they'll say, well, I know they could get me availability faster. And I say, well, you need to think about it as a total cost of doing business. They're going to charge you transaction fees. They're going to give you availability in certain terms. All of that is it's not so much winners and losers, again, as long as both parties to the transaction understand and have had an opportunity to negotiate something that's fair for them. Does that respond? Okay. Let me just end with our strategic direction. I've talked about, integrity, efficiency, access, all of these sorts of things we've been interested in as the Fed for a long time. But our latest strategic plan that we issued last year had a new emphasis on the end-to-end. Remember I told you we're all in the interbank clearing arena? That's been our area of focus. So in our latest strategic plan, we said, we need to push ourselves a little bit and maybe do more to improve the experience of the end user, both when they originate and when they receive and try to collect. And so we're doing a variety of things, here again, looking at how can we play more of a role, perhaps not just in making sure our own systems are reliable and secure, but perhaps in helping the end user on these dimensions. Same thing with speed of clearing. Again, that doesn't necessarily get into the terms and conditions, but would it be helpful if our clearing systems were even more real-time as opposed to next day? Same thing with efficiency. And what I'll say to you about this, because we really don't have time to get into any of it, is if you have a real interest in the payment system, next week on Tuesday, we are going to be issuing what we're calling a Payment System Improvement Public Consultation paper. And I believe, if you're interested in it, you can just leave your card with us and we can get you the information about it. But we're going to be issuing it on Tuesday. It's going to be available. I think the website is called Payment System Improvement, but I'm not sure about that. fedpaymentsimprovement.org. You'd be able to go to that website. The paper will be posted on Tuesday. You could see what some of our thinking is as it relates to future direction. And then at the end of the paper, and the paper isn't that long, half a dozen pages, there are a whole bunch of questions where we're saying, so what do you think? Is this a good idea? Is this a bad idea? Should we focus on this kind of thing with security? Should we focus on this kind of thing in terms of innovation? You tell us. So if any of you, based on this conversation, have a lot more interest in learning more, that might be something to think about. And also on our own public website, for those of you who have indicated interest in fraud, we do some fraud-related research here on payments fraud, and you can access that through our public website. So again, we've covered a lot quickly. You've had tons of great questions. I'll be around a little bit longer for any other questions because I know we have exceeded our time, so I'm going to cut it off.